Hey everyone, this is Iskandar. Thank you so much for joining today's session. I'll be telling you all about yield farming and other important crypto concepts, as well as providing you updates on our very special project, GEMSTONE Finance. So first, let's briefly go through what DeFi is, and then we'll move on to concepts like smart contracts and the Binance Smart Chain. All right, so for those that don't know, DeFi means decentralized finance. And that means there is no third party or human gatekeepers to handle your funds, unlike centralized structures like banks. It's also an umbrella term for all the decentralized financial applications or dApps based on the blockchain. And these projects are built using smart contracts and operate on networks like Ethereum or the Binance Smart Chain. So what exactly is a smart contract? So think of it as a real contract, an agreement that has terms and rules. So two users may create a smart contract. They may agree to the terms and rules. And the smart contract will execute functions based on these rules, which are written as code. So as you can see here, the contract terms will be written as code. And instead of some third party enforcing these rules, the smart contract does it by itself. So once the smart contract is stored in the blockchain, whenever conditions are met, the smart contract will execute itself by itself without anyone needing to do it. So it works through an if or when and then structure, which means certain conditions have to be met in order for the operation or function to be executed. Smart contracts ensure all participants can be immediately certain of the outcome. So for example, if you are purchasing something with cryptocurrency, the terms could be that if the buyer doesn't submit payment by a certain time, the exchange is canceled. Or if the seller doesn't send the product by a certain time, then the money is sent back to the buyer. And as I've said, this is without any third-party interference. So there's no need to contact a bank or the store to get your money back or anything. It is an automated process that happens automatically. The smart contract executes itself automatically. So smart contracts can be used for exchanging money, delivery services, unlocking of content protected by digital rights management, or other types of data manipulation. It can be used on different blockchain networks too, like Ethereum and the Binance Smart Chain. So let's talk about the Binance Smart Chain. First, let's understand what the Binance chain is. So the Binance Smart Chain runs parallel to the Binance chain, which is what came first. And so it was launched by Binance in April 2019, and its primary focus was just to facilitate fast, decentralized trading. So due to limitations inherent to the blockchain systems, however, the chain didn't have much flexibility. And so smart contracts in such a system that is optimized just for fast trading could lead to significant congestion of the network. For example, at the height of the CryptoKitty popularity, CryptoKitty is an NFT blockchain game. It's another decentralized application. At the height of its popularity, the Ethereum blockchain was congested and brought to a standstill. So scalability remains one of the most challenging hurdles to the blockchain development, and that's where the Binance Smart Chain comes in. So the Binance Smart Chain, or the BSC, is another blockchain network that can run smart contracts and is also compatible with the EVM. So the EVM is the Ethereum virtual machine and is just the computation engine that acts as the foundation for Ethereum's operating structure. So it also runs and executes smart contracts. And it means that the BSC, if the BSC is EVM compatible, that means it can run Ethereum-based applications. So in theory, this makes it easy for developers to port their projects over from Ethereum. For users, it means applications like MetaMask can be easily configured to work with the Binance Smart Chain. So we can use wallets like MetaMask or Token Pocket to hold tokens that run on the BSC, like BNB and BUSD. So why did we choose the Binance Smart Chain for our GEMSTONE Finance project? Well, it's because firstly, Binance is the leading decentralized exchange. It is the leading DEX out there right now. And compared to Ethereum, the gas fees are much, much cheaper, especially right now. Ethereum gas fees are incredibly high. So that's why we'll use the BSC. It's much, much cheaper. It also boasts high performance and is used by top DeFi projects and is ultimately designed to enhance scalability. And like I said, scalability is really important, and we need that so that we can run all sorts of complex smart contracts. And we will need to do so to integrate our yield farming finance vault alongside our NFT and gaming ecosystems. That's why we will need the Binance Smart Chain for that. Okay, let's quickly take a look at some updated figures to show the popularity. So I had shown you the total value locked for DeFi in previous sharing sessions, and they were around $150 billion. That was the last time that we had seen the figure. Well, now as of September of this year, we can see that the total value locked has hit $178 billion. That is $178 billion. So a few weeks ago or last month, it was sitting at around $150 billion, and it has gone up to $178 billion. It's a new all-time high. It's a new record. It's definitely surpassed what the last all-time high in around May. And this was also just around $150 billion. So it's pretty cool. To put it simply, of course, TVL represents the number of assets that are currently being staked in a specific protocol. So this would be all the assets staked in all DeFi protocols across the board. So it's pretty astonishing to see how many billions are currently staked, are currently liquid, basically. They're liquid inside of financial vaults, for example. And we also have a figure for the total market cap. So last time I had shown you guys, it was around $120 billion. And now it has soared up to $145 billion. It's an insane amount of money. It's insane total market cap. And to put it into further perspective, DeFi is only 2% of the blockchain market. Only 2%. So that shows an absolutely huge potential for growth. You know, this is what is trending, but this is also what is going to stay. This is no mere bubble. It can only really go up from here. All right, guys, now I will talk to you about staking, liquidity pools, and yield farming in more depth than I have before. So I will introduce some key concepts that is pretty important to know when it comes to these particular terms. Okay, so we know that the main financial applications are staking, participating in liquidity pools, and yield farming. This is the main way that people make their money through decentralized finance. So you've seen the GeFi interface before. This is what the GeFi vaults look like. And some of you may know what these tokens are, but allow me to explain if you don't know already. So these tokens are tied to our yield farming pools as well. So some of you may be using BUSD, or some of you may be only using BNB to stake with your GEG. Either way, I'll explain what is what. So the BUSD is the Binance US dollar. It is a stable coin founded by Binance. A stable coin is a cryptocurrency that is tied to or pegged. So it is pegged by a fiat currency, and a fiat currency would be basically a real world currency like the US dollar, for example. So stable coins allow users to cheaply and rapidly transfer value around the globe while maintaining price stability and with reduced transaction fees. So the BUSD is basically tied to the US dollar. So one BUSD is one US dollar. Now we have the BNB, and this coin is what powers the Binance ecosystem. It's used for many of its services, and people mainly use it to pay for gas fees on the Binance exchange and on the Binance Smart Chain itself. And we've got Cake. Cake is the coin that sustains the PancakeSwap ecosystem. Similar to GeFi, you earn Cake rewards by providing liquidity and staking on the platform. So yeah, you are incentivized by providing liquidity so that you get rewards over time. And we know that staking is an activity where a user locks or holds their funds in a cryptocurrency wallet to participate in maintaining the operations of a proof of stake based blockchain system. So let's talk about what proof of stake means. So there are two consensus mechanisms, two main consensus mechanisms designed to confirm and validate transactions on the blockchain network without the interference of a third party. There are other types of consensus mechanisms, but these are the two that I will discuss today. So let's before we go into proof of stake, let's find out what proof of work is, because this was the first. So Satoshi Nakamoto, the founder of Bitcoin, had to find a way for transactions to be verified without a third party. So he created the proof of work system. So there is this need for consensus because the network needs to be sure that the transaction is valid and that someone isn't trying to do bad things, such as spend the same funds twice. So that would be called double spending. People who do that intentionally, that's very malicious. That's bad because what they're doing is they have, let's say they have 10 Bitcoin and they use that 10 Bitcoin to buy two things that are both worth like 10 Bitcoin. So you're basically spending money you don't have. And so that's why, that's part of the reason we need these consensus mechanisms. And proof of work is based on a complex form of mathematics called cryptography. So that's why this is all called cryptocurrency, because of that mathematical complex form of mathematics, basically. So yes, with proof of work, somebody must use their computational power to solve a cryptographic algorithm. So it wouldn't be one person that is manually trying to solve this algorithm, but it would be a person or multiple people across the world that have these high-powered computers. And these computers are basically competing against each other to solve this equation. These machines apply brute force. It's basically guesswork. So they're inputting random numbers until it solves the equation or it gets as close to the answer without going over the value. So when the problem is solved, the block is validated, right? The block is confirmed and the machine gets rewarded. The reward, for example, would be Bitcoin. So that's similar to what mining is. That's very similar to what mining is. In fact, that is what Bitcoin mining is. It is the people who confirm the transactions. They get a reward for validating the block, and that is what Bitcoin mining is. So if you've heard of that term, that is what proof of work, that's what that structure basically is built upon. But the problem with this is that it uses up a lot of computational power. So that's a lot of energy being wasted, and it isn't great for the environment. Proof of stake is different to proof of work, and this was created in 2012 by Scott Nadal and Sonny King. So the initial benefits for this were to include a fairer and more equal mining system, more scalable transactions, and less reliance on electricity. It does attempt to reach consensus just like proof of work, but instead of providing this computational power or this hash power, as it's based on the SHA hash 256 algorithm, it achieves consensus from the stakers in the network. So most proof of stake blockchain have a requirement where you have to stake in some coins. And of course, this requires a upfront investment. And those who have staked can help validate transactions. So consensus is achieved when at least 51% of nodes or stakers fit the state. So the state is the status of the network, or what the network believes to be the truth. When at least 51% of nodes do share consensus of the truth, that is when the block is validated. And the probability of winning the block reward depends on how much coin you have staked. So to compare the two, in proof of work, the node that solves the equation gets the reward. But in proof of stake, it isn't necessarily one node that gets the reward. It's everyone who contributed to creating the block, to validating the block. So the majority who reach consensus of the truth. And to compare again, it's like the coins in proof of stake is equivalent to the computer power in proof of work. So those are the two things that separate how transactions become verified and how they're confirmed. So it's similar basically to how you're getting your rewards from staking, right? So this is compensation for taking on additional risks, and that's why you're getting rewarded. Staking tokens is equivalent to locking them away for a period of time. And because you renounce your ability to sell those tokens in that period of time and exit the investment, then you are paid for this action. All right, so let's have a look and let's talk a little bit more about liquidity and staking. So this is basically how liquidity works. Here's a better visual for those that provide liquidity but don't know what happens to it. So a liquidity pool is a collection of pooled assets that allow traders to buy and sell these assets using the provided liquidity. So you would be a liquidity provider. And let's say, for example, you are depositing some of your liquids, so you're doing 50% of it is GEG and 50% of it is BNB. You put it into the pool, and then so you would add an equal value as a liquidity provider. You would add an equal value of both tokens into a pool to create the market. And in exchange for providing your funds, you earn trading fees from the trades that happen in this pool proportional to their share of the total liquidity. So traders will be using your liquidity to trade, and they will be paying some fees, and these fees you will earn back from the liquidity pool. So yeah, traders trade with the liquidity provided, and it gets paid back to the pool as rewards. But these traders aren't actual real human beings. The traders we are talking about are AMMs. So an AMM is an automated market maker. And an automated market maker is a system that provides liquidity to the exchange it operates in through automated trading. It's a type of decentralized exchange protocol that relies on a mathematical formula to price assets. Instead of using an order book like a traditional exchange, assets are priced according to a pricing algorithm. So an AMM works similarly to an order book exchange in that there are trading pairs. However, you don't need to have a counterparty on the other side to make a trade. Instead, you interact with a smart contract that makes the market for you. So you could think of AMMs as a peer-to contract. There's no need for counterparties in the traditional sense, as trades happen between users and contracts. Since there is no order book, there are also no order types on an AMM. What price you get for an asset you want to buy or sell is determined by a formula instead. So yeah, there's no need for counterparties, but someone still has to create the market, right? So that liquidity in the smart contract still has to be provided by users called liquidity providers. So that's how it all ties in. That's the full circle with that. Now let's tie in these concepts as they're all used in yield farming. So with yield farming, it consists of utilizing these pools, utilizing these strategies of depositing and moving funds from pool to pool on multiple platforms to take advantage of the highest APYs. And the concept for yield farming is similar how you earn interest when your money is stored in a bank. And the concept here is reliant on compounding. So compounding refers to earning or paying interest on previous interest, which is added to the principal sum of a deposit or a loan. So most loans and investments use compound interest rate to calculate interest. So basically, if you don't know how to compound, let's say you have your rewards here, you harvest your rewards. So in this case, you will earn GEG, you'll earn some GEG as your rewards. And you can put that GEG back into your liquidity pool. So you can either split it in half and exchange half of it for either BUSD or BNB, depending on your LP, or you can just add in your own BUSD or BNB out of your own pocket. Basically, you just add it back into the LP, you deposit it, and now your total value will be higher than before. And therefore, your interest rate will be calculated according to your new total value. So an increased deposit means increased rewards. And you keep doing that over time. You keep harvesting every day or every few days and restaking it into the pool, and you will then compound your rewards. So as we get paid by these high APYs, our main concerns here lie with impermanent loss. So let's talk about impermanent loss. As multiple tokens are required to provide liquidity, an overall loss can occur if any token loses value. So this is known as impermanent loss because it is only realized if the funds are withdrawn while the token prices are lower, but it won't affect you if the token prices rebound. It only becomes permanent when you actually do sell, when you actually do withdraw. So impermanent loss is a loss that funds are exposed to when in a liquidity pool. This loss typically occurs when the ratio of tokens in the liquidity pool becomes uneven. And it's calculated typically by comparing the value of your tokens in the liquidity pool versus the value of simply holding them. And since stable coins have price stability, liquidity pools that utilize stable coins can be less exposed to impermanent loss. So that is one way that you can avoid. There's one way that you can avoid impermanent loss is by using pools that have stable coins. So you can either have a pool that has one stable coin on either side, or even better, you could find a pool that has two stable coins attached, because the price stability will be very unlikely to waver since it is tied to or pegged to another fiat currency, right? And another way to avoid it is to just avoid risky and volatile cryptocurrency pairs. So projects that you aren't super confident in, where the prices are just bouncing up and down all the time, and that's very volatile. I would definitely avoid doing that. And of course, a good way to avoid having it as permanent loss, basically. So to avoid the permanent loss, you got to hold on for dear life. Because like I said, it is only permanent once you sell. So you don't want to sell while the ratio is uneven. You want to wait until the price rebounds to at least where you bought it at. And that's how you can avoid losing money with impermanent loss. All right, so now we've got over some pretty important concepts. Let's move on to some of the GeFi news and updates. So if you don't know, GeFi is a decentralized blockchain ecosystem that is built on the Binance Smart Chain and built on top of a sophisticated engine that utilizes smart contracts that supports pooling with reduced impermanent loss. So, hey, we've gone over each of those concepts so far, and I hope that that all makes sense. I know I've said that line in previous sharing sessions, and maybe you didn't totally understand it before, but now I hope that you do. And GeFi constitutes of two important ecosystems, which integrates a lucrative financial vault with a unique NFT gamification equipped with an extensive marketplace. So let's just check out how GeFi has been performing so far. So as of this day, our TVL, we've had some pretty good milestones, such as the $2 million in our first 24 hours and over $8 million after 1 week. And it is currently sitting at $11 million TVL. That is $11 million currently staked into the DeFi, in our GeFi protocol right now, which is great, which is amazing. And we have gone through some ups and downs as well. We've had some updates and new pools, and this has all kind of contributed to a decrease and increase in TVL. And right now we are sitting at $11 million, which is a very, very good milestone. And our 24-hour trading volume does vary. On this day, it was 200,000, and our market cap also varies. But these particular statistics, as well as the ones that you can see here, which are the LP figures for both GEG-BNB and GEG-BUSD, you can look at these charts and this information on the bogged finance chart with our GEG chart on bogged finance. So if you ever want to check that out, if you're in our Telegram group, every time the bog price bot pops up, it will come up with, these figures with the price and all that. And it will also ask if you want to view chart. When you click view chart, you will be sent to a website that will tell you all of this information. So it'll take you straight to it. And it's great how transparent everything is. You know, you can see the trades, you can see all the trades that are happening, you can see how much is being bought and sold as it happens. So that's a very good. I like the transparency. Of course, that is the main thing. That's a huge thing about blockchain technology and decentralization. So for those that are new, I hope these milestones sound appealing. There are plenty of advantages as well to becoming a GFion. So I'll just quickly go over those benefits. I've highlighted this before in previous sharing sessions, but there are huge benefits to becoming a GFion. First of all, of course, there is passive income. So this is where you would stake your funds into our finance vaults, into our pools, and you will be earning passive income over time just because of those APYs, and you can harvest your rewards anytime. Also, you will have access to this all-in-one service. So it isn't just the DeFi finance vaults, but it is also going to have an NFT marketplace and blockchain games that are going to launch at the end of this year or the beginning of next year. That will vary. And so those are different ways to also earn some money because with NFTs, you can, of course, make your own and sell them, or you can just trade NFTs to turn a profit. And with blockchain games, you play to earn. So you play them to earn more cryptocurrency tokens, which you can sell if you like, and therefore earn money. And what I really love about GeFi as well is that it is really, really community based. So you get community rewards for life. There's the affiliate program. So if you refer your friend and they sign in or they sign up with your referral link, then that means that every time they harvest their rewards, you are getting a 10% of that 30% performance fee that they have to pay whenever they harvest. So you are earning money every time your friends harvest. And because we are such an awesome community, we're actually a mega community that consists of multiple big communities. We are all helping each other. We are all sharing knowledge and news about cryptocurrency, about decentralized finance, and about gemstone finance as well. And of course, this will help you stay ahead of the curve as there are multiple companies worldwide that are also investing in blockchain technology and cryptocurrency. So this is kind of where the future is going. And by investing with GeFi, you are staying ahead of the curve because not everyone is investing in cryptocurrency yet. We may not be at the early stage anymore, but we've only just passed that stage. So it's still a great time to be getting involved with a project like this. All right, so to update everyone, we have launched 2 new pools on GeFi and we are super excited to announce them. Here we go. We have our Axis and BNB pool. These new pools are now ready to go. That was Axis and BNB is our LP pool. And we have a single asset pool, which is GEG. You stake your GEG and you earn MBOX. So Axie and MBOX are both tokens that basically are the backbone of their NFT gaming ecosystem. So Mobox is an NFT gaming ecosystem and Axie Infinity is also an NFT blockchain game. And those are the 2 tokens that supply, that are in circulation. I think Axie is great. I play it every day and basically these are play to earn games as well. So I play these games and I earn back some cryptocurrency. In Axie's case, it is SLP that you earn, but Axie is doing incredibly well. It has started booming. Even after 2 years of being live, it has finally caught on massive popularity. So it has a huge foundation, which I would recommend going in. And Mobox has also had an incredible start. It was released this year and has had tens of thousands of NFT in sales in its first week of launch, which is super impressive. But you have to know, though, in order to stake in the Axis BNB pool, you have to provide your liquidity through ApeSwap. So you may have been using PancakeSwap to stake in your Cake BNB, BNB BUSD, your GEG BNB, and GEG BUSD pools. They were all using PancakeSwap. So this time, if you want to stake in Axis BNB, please go to ApeSwap. You can actually click the arrow here, and it will take you to the link. It will take you exactly to where you can provide your liquidity, but it acts exactly the same as PancakeSwap, so it isn't difficult to manage. Of course, if you have any questions, please do ask us. But yes, put the liquidity on ApeSwap before you're trying to stake on Axis and BNB. And yes, I've already explained that there is a single asset pool, but by participating in a single asset pool, that means you don't need to create a liquidity pool. You don't need to turn it into liquidity. You just stake your GEG and you will gain MBOX rewards in return. So yeah. Let's move on to some Vault FAQs. Just some people would like to know a bit more about this. So a Vault performance fee is our 30 performance fee when you harvest your rewards. So this 30% is needed so that GeFi can profit and also improve the ecosystem. So that 30% is distributed into the affiliate program, the community leader program, treasury, and development, as well as a safety net. So that's where the 30% of your performance fee goes. And a gas fee is a transaction fee paid in BNB on the BSC. So that's relevant to us. On the BSC, a gas fee is paid in BNB, and this is used to pay Binance for using the Binance Smart Chain. And you may wonder who is holding all of the funds. Well, you have 100% ownership of all of your funds. So nobody from GeFi is holding onto your funds. No one from GeFi has access to your money. It is still all of you. It is still just you. You have 100% ownership. There is absolutely no time lock for investing. You can go in and you can go out whenever you want. Whenever you want, and there will be no waiting period. So there is no time lock for investing or taking out. APYs are generated via PancakeSwap. So the staked LP are all used to stake in PancakeSwap, and we automatically compound yields via PancakeSwap and pay the rewards back to the vault, back to the farm. And people, they get concerned when you see an APY drop. It, started off sometime in the thousands and it has dropped into the hundreds, but that's okay. That's totally normal. It's not a bad thing. It doesn't mean that GeFi isn't performing. In fact, it means that more people are using GeFi, more people are using the farms. So don't worry, it doesn't affect how much you have in deposit. It just means that our foundation is getting stronger because more people are using our GeFi farms. All right, so those are some of the frequently asked questions to do with our GeFi vaults. Now let's move on to our security details. So we'll talk about the security update for our pools. But before we do that, we'll have to understand a couple of concepts first. So let's find out what an EOA and a smart contract wallet is. So users may be using a single key wallet, often referred to as an externally owned account. So an EOA is an externally owned account. These accounts are secured with a private key, which can be transformed into a 12-word seed phrase for the user. So like the mnemonic phrases on Token Pocket, those words that you have to remember, that you have to write down, they basically act as a password. But if those words are compromised, if that private key is compromised, then the funds can be stolen. So when it comes to business, if your business comprises of more than one person, an externally owned account is not a secure way to manage your crypto business's funds. If an employee goes rogue or is careless with the private key, the funds are gone forever. So we need something with tighter security than that. We need a crypto wallet that interacts with smart contracts. So this is a smart contract wallet. In other words, these wallets enable different types of activities, such as buying and selling tokens, token exchange, dApp interaction, and trading. So this is where we enter the multi-signature Gnosis Safe. So Gnosis Safe is a smart contract wallet running on Ethereum that requires a minimum number of people to approve a transaction before it can occur. So if, for example, you have 3 main stakeholders in your business, you're able to set up that wallet to require approval from all 3 people before the transaction is sent. So this assures that no single person could compromise the funds, and this definitely increases the security. And Gnosis Safe is now the first project on the Binance Smart Chain with a different and more secure approach for managing funds. And rather than using an EOA, Gnosis Safe operates entirely with smart contracts that define access control rights and enable more sophisticated security features. So Gnosis Safe multisig comes with some of the latest security standards, and we had to change the pools because Gnosis Safe did an update. So the previous code stopped supporting BSC, so they had to make a new one. Basically, the previous community version of Gnosis Safe homepage on the Binance Smart Chain was retired. So Gnosis Safe team had to launch the mainnet support of the BSC, and all users of Gnosis Safe on the BSC had to migrate safes, and they had to do it manually by creating a whole new safe via a new interface. And they had to do it manually due to an incompatibility proxy implementation. So that's what we had to do. We just had to create new pools because of the Gnosis Safe update. And it doesn't affect any of the APYs. It doesn't affect any of the rewards that you earn, and it didn't affect anything that you had deposited. So don't worry, it was just a big update to ensure quality security. And if you want to see, here are some of the comparisons between an EOA and our Gnosis Safe multi-signature wallet. So these are some of the security standards. As you can see, it's multi-signature, so multiple people have to approve, as opposed to even a centralized exchange and an EOA. Integrates with DeFi like an EOA. There are some privacy, and it can also hold NFTs. There are gasless signatures, whereas EOAs don't necessarily have gasless signatures. And it's open source and transparent and is formally verified. So these are all the security measures that are taken on Gnosis Safe. So yeah, so that is our security detail. Here are some frequently asked questions. Basically, is this safe? Is this a scam? I will have to tell you that we are releasing our security audits very, very soon. So our security audits will be released, and once they are properly approved, then I can tell you for 100% sure that this is totally safe. Of course, right now, I can tell you that it is safe. We are backed by a lot of different people, and it's definitely not a scam at all. We don't have access to your funds, so we can't steal your money. But of course, investment is risky. You know, investment is always risky. So it is up to you how you decide to play the game to see if you lose money. And, you know, you don't want to lose money because you've panic sold. So sometimes prices will drop down, and you just have to keep it cool, and you just have to keep up with the news and think logically before you do any trading. You know, you don't want to trade with emotions. And that basically comes to our next point: to ensure greater security. So here are your mnemonic phrases here on the left. So basically, it even suggests that you write it down on paper. Don't type it out. Don't screenshot it. It becomes much easier for hackers to get into your computer and fish out this information. So once they have this information, your private key is compromised, and therefore your funds will be at risk of being stolen. And I suggest enabling two-factor authentication with all of your accounts. You need two-factor authentication. It basically looks like this. So you are trying to log in, and you'll have to send a code to your email as well as your phone number, and you can use the Google Authentication app. So you'll have 3 more layers of security. So you input those codes in a certain amount of time, and you submit it, and that will be the only way that you can log into your account. So I would highly recommend doing this, as it makes it way less likely that someone can hack into your account and steal your funds. And you need to be careful with money. So this is super sensitive stuff. This is your money. You need to look after it properly. This is where it becomes your responsibility. All right, well, let's talk about price action now. So I just want to talk to you about why price may move up and why price may move down. And it basically just comes down to supply and demand. When people buy, the price goes up. And when people sell, the price goes down. And that's as simple as that. Prices may go down dramatically, or it may go up dramatically because of either lots of different people are buying in or selling, or there are things such as whales, whales or short-term investors. So whales are people who have tons and tons of money put into the investment. So whenever they sell, it affects the price. It affects the price by them individually. There could also be a group of whales that are communicating and are manipulating the price on purpose. These people have a lot of money, and these have a lot of money. So basically, any project will want to kind of filter out whales eventually, because they're only capitalizing on making a quick buck, whereas a lot of projects depend on having a strong foundation and being in for the long-term gain. So that is also what GeFi is about. We're about the long-term investment. So yeah, and it also depends on how many people are holding. It depends on how many people hold throughout price action. The more people that panic sell, the more that the price goes down. So if you just hold, then the price will act more stable than it would if everyone was panicking and selling. And so, yeah, you just want to have faith in your projects, when it comes to this stuff, because otherwise you're letting a team down, especially if you're part of a community and you're panic selling, then you are in a way letting the team down. So you want to keep it cool, you want to keep it zen, and you don't want to trade with emotions, especially when the price action is looking up or is looking down. So it all ties into our long-term journey and how we want to be built on a foundation of long-term investors. The short-term investors will eventually fade away. The whales will eventually filter out, and they may, come in and out again throughout time. And that's okay. That's something that we cannot control. But what we can control is having a strong foundation to build a strong community of holders, of long-term investors. The more members we have, the more long-term investors we have, the higher the price and the more stable the price will be. If you're concerned, this project is so early, like it's so young. We're only over a month old, and we've already smashed some milestones and surpassed our own expectations. As I had explained before, Axie Infinity, which is doing really well right now, is a few years old, and it took a couple of years to be able to start really booming. So you just have to hold, and you just have to have faith in your projects, because then you are facilitating a strong community, a strong foundation. And if you're concerned, just hold for 6 months. Hold for 6 months to see how far this can go. It takes over 3 months to fully evaluate the performance of a project, and it'll take as long to evaluate how well GeFi is doing. So there will be lots more updates and a lot more services coming, and those services such as more pools and an NFT marketplace and blockchain gaming, this will all help facilitate a strong foundation, as we'll bring in more people and we'll bring in more investors, and hopefully the people that we have will even invest more. So it's all about the long term, and that's something that I will always preach. And this is a great quote to just put it all into perspective. The day you plant the seed is not the day you eat the fruits. You are going to have to put in your money in early days, and you're going to have to wait for your tree to properly bloom, for your tree to grow and to start bearing fruit, to start bearing that money, those rewards. So it's all about patience. It's all about the long term. You're not going to make that quick buck unless you are a risky trader, unless you are a gambler. And to be a gambler, you have to be super knowledgeable and always up to date with cryptocurrency. So it's a very dangerous game. People still play it, but if you just want to make some passive income, then you just have to worry about the long-term investments, basically. And we need a huge community to do that. We need that strong community. So let's talk about it. Let's talk about our exciting news about our community campaigns. All right. So we got some fresh updates for you guys. First of all, the affiliate program is now live. So if you've referred your friends and they have been harvesting, then you have been earning extra rewards. And that has all been distributed. And this will stay live until the rest of time, until GeFi keeps going, you know. That's 10% of the performance fee. Like I said before, that 30% performance fee is always incurred whenever you harvest. 10% of that is going to go to whoever referred you. So yeah, and as our community rewards unfold, our ecosystem will become larger and more stable. And speaking of community rewards, we have got our community leader awards ready to go. All right, so we've got CL1, CL2, and CL3. So our community leaders are in 3 different tiers. We've got Timeliner, Space Glider, and Moonrider, and they all come with their own special benefit, which is 10% for Timeliner, a 20% reward for Space Glider, and a 30% reward for the Moon Riders. And anyone can become a community leader. If you are interested, please talk to our community admins or whoever referred you, and we will make sure that you get what you need in order to become a community leader, because the rewards really become awesome. If you have a community and you're a Moon Rider, you're earning 30% of everyone's harvesting performance vault fee, right? You're earning 30% of everybody you are leading. So that is lots and lots of extra income that is coming your way just because you've referred your friends and have built your own community. Now, there are conditions that come with being a community leader. Please ask us if you would like to know more, but basically you will need to participate in some training courses, and as the tier goes up, you will need to have a certain number of people in your community. So this is incredibly exciting and is a huge opportunity to make even more money with GeFi. So I recommend looking into this community leader program and becoming a community, because you could join us. You could join all of us in our mega community under the GeFi brand. So we've got Rice, 6nim, G5, STA League, OTG, and CKOL. We are all communities under GeFi, and if you are interested in joining us and sharing knowledge and helping and being helped, then please do ask us for more information. We would love to have more communities involved. All right, guys, I will leave you guys with a little bit more of advice and warnings. So if you would like to join the community first, though, these are our links. I will share this out with you a bit later, but let's just, and this is the GEG as well. If you're new, then you would like to please register on GeFi, sign up for a crypto wallet, buy your assets and exchange them for GEG. You can go on to things like CoinSniper to get your contract address, and you'll need that when you become a GeFion to get your GEG. Okay, so here's some advice and some tips, but basically, if you can't hold, you can't be rich. So I've already explained this many times before, but do not panic sell. You know, staking and farming, yield farming is a long-term investment, especially with GeFi, and you cannot focus on the short term. And if you're panic selling, if you're not holding, then you are essentially losing money, especially if you don't hold, you're not staking. And when you're not staking, you're not earning passive income. The thing there is that even if the price of the token is lower, you're still earning the same amount of tokens. So you're still earning the same amount of GEG tokens as your reward. It's just that the price is valued lower. So if you hold on to your GEG until the price rebounds, until the price goes higher, then you actually earn way more money than if you tried to sell in So basically you don't want to panic sell. This isn't a game for gamblers. And if you're really worried, you can also just check the bogged finance charts. You can see all of the information. You can see the TVL on the GeFi website, and that will show you how much is being staked, and that will show you if it's millions of dollars, like $11 million, then you know that it's got a pretty strong foundation at the moment, that there are a lot of assets currently in the ecosystem. And please, please, please beware of scammers. Always ask admins if you're unsure. There are a lot of people out there that will try and get your personal information, and they will mask this as kind of like free airdrops, for example. So people might offer you free airdrops, but you have to give them your private key or your contract address. Please, please, please never share anything like this with anyone. We would never ask this of you, and we will most likely not DM you first. We will not message you first unless we say so in the Telegram chat, but feel free to message us first, please. Keep your wallet address secret, keep your password secret, your mnemonic phrases secret, and just don't really reply to any strangers on Telegram. Don't click any links that you aren't sure of, because they may allow for hackers to phish for your information. And of course, do not panic sell. Keep your cool and don't trade with emotions. All right, thank you guys so much for joining us. Next week, our upcoming session will be all about NFTs, and this is a super cool side of the crypto world that I'm very excited to teach you all about. So this is going to be really, really cool. It's a whole new world that we can adventure into. So please join us for that. So yeah, thank you for attending the session. I hope you enjoyed it. I hope you've learned a lot, and I hope you are eager to keep investing in GeFi. If you're new, I hope you now will invest in GeFi and earn these passive incomes. I've highlighted the benefits many times before. It's an awesome project, and I'm having fun making money. So you can too. So if you have any questions, please ask us in the Telegram group chat. And if you haven't logged in before, then here is all of our details. Our Telegram, we've got the GeFi community as well as our STA League Telegram, and we've got Twitter pages. And this is a very important GitHub. So this will tell you all the information you need to know about GeFi if you haven't done any research or investment as of yet. And here are the links for where you can register and start staking your assets. So yeah, those are all the important links that you will need. And thank you again. I'm Iskandar, and have a great day. See ya.